All right, I'm Tycoon. Super excited for today's video. Going to give an update on CCL, Carnival Cruise Lines. But before we do that, okay, I just want to go over this article here from investorplace.com, pointing out a really interesting statistic, all right, that could be a very good bullish indicator, all right. Now, it does pertain to the NASDAQ 100, and CCL is not a NASDAQ stock. But, if the market and NASDAQ and the SPY, the S&P 500 end up, having a nice bullish rally, that could, fall off into CCL, Carnival Cruise Lines. Okay. So indeed, this week, the number of NASDAQ 100 stocks trading above their 200-day moving average crossed from below to above 20%. All right. So, it went, yeah, from below to above. All right. That's a bullish spread crossover signal that always leads to big rallies. When I say always, I mean always. Since 2008, the signal has led to positive tech stock returns over the following 60 days, 100% of the time. The average turn in that stretch, 15%. Okay. So, we've gotten a lot of the fears in the market priced in already, right? Inflation, it's not a secret. We've been pricing that in. A recession. They're now saying that they've 100%, pricing in a recession. The banks are, right? Deutsche Bank is saying that. Okay. And then, do you have the Russia-Ukraine crisis, right? We already know about that. COVID lockdowns in China are, easing up, right? Or at least they have been. Okay. So, a lot of the fears in the market have already been priced in. And all we need is a little bit of sign of, some bullishness, right? Or a little bit of a bullish signal for investors and institutions to really start pouring their money back into the market, even if it is just short term for maybe a 30 or 60-day rally. Okay. So now that we got that out the way, go ahead and take a look at the chart real quick for CCL. Okay. And we can see here that we're continuing to make, ride this momentum off the bullish divergence on our daily chart. Okay. So we have these ovals here. We have lows, lower low, lower low, lower low. Right. That's a term you should get familiar with, lower lows. But our relative strength index, the RSI, is increasing. Okay. So each time that we made a lower low on the RSI, we're actually making a higher low on the RSI. Okay. So we've been riding this trend line here. We may pull back and retest it, but things have been looking pretty good. Okay, we've been consolidating in this area here in between our 61.8 and 78.6 levels on the fibs, which that's fine. That's expected. Given the market conditions, we had CPI and PPI coming out, a lot of fears in the market. So these are the main levels I'm going to be watching. Okay. It's going to be 8.7 and 918. Once we break out past 918, we're going to be at the 50% retracement at 9.51. And we break that, we have the nice juicy gap up to fill from 962 up to 1027. Okay. These gaps, they tend to fill about 90 to 95% of the time historically in the stock market. So you have to prepare yourself and position yourself accordingly. And you have to ask yourself a couple questions, when is this bull, when would this gap fill, right? A gap up is going to fill in a bullish market cycle. Okay. So when the, money's coming in and, we're having a nice little bullish cycle, we could see that gap fill. All right. That's what happened here last time. Okay. We had a big gap down over reaction. Okay. And then earnings came out and we actually came up and filled the gap very shortly afterwards. Okay. So, I'll be looking to see if we're going to repeat that pattern. All right. We're consolidating in between these major support levels. And all we have to do really is break past. Okay. Break past and we'll be able to fill this gap up to 1027. So that's kind of where I'm looking at things for the short term on CCL. Right. If we go to the weekly chart, we'll go over the weekly demand zones that I showed you guys. All right. And we just have this super, super strong weekly bearish or bullish divergence. Okay. So I'll go ahead and pull it up here. All right. And again, we have a gap up to fill. All right. On this one, all the way up to $40 on our weekly chart. But we have to ask that question, is this a bullish cycle, rotating all the way up? No, we're just testing the levels of our demand. Okay. So, originally when I first started covering it, I said I'm going to be watching and looking for a breakout to the upside into our supply imbalance, right? Where we could face some, resistance and fall back down, or a breakout to the downside into our weekly chart demand zone where we can find some support. All right. And we're showing great signs right now, okay, that we come down to the bottom and we're starting to consolidate and attempting a reversal. Okay. It's still very early in the weekly chart. So there's a lot of time for this to play out. Okay. But, think of like on a macro scale, potentially that 7.8, when we got down to about $7, $8, that may have been our bottom. Okay, it definitely is not going to be the bottom, because we could break that level, all right, and drop out of demand. If there's not enough buyers present, right? If there's not enough demand in the market, the price will just consolidate in here until it falls lower. But I'm really going to be looking to see if buyers step in and push this thing out of our demand zone above 1328, and potentially all the way back up to 25 and 30, right? That would take a while. I would expect that to take a year or longer, right? Maybe a couple years. But it's something that I'm definitely looking at and trying to position myself accordingly for, right? So again, we also have major weekly bullish divergence. All right, so I'll bring the ovals back out. We'll take a look. Okay, we have a low here, right, and then we're testing the same exact low. Right, so here's our demand. We're coming down to the bottom of the demand zones each time. So we have a low and then basically a same low here, right? So the lows are consistent, right? We're making equal lows, but higher lows on the RSI. So even in the past here in COVID, when the price dropped to these levels, right, the relative strength index was at 16. Well, now when we're dropping to these levels based off inflation fears and FUD and all of that, we are much higher. Okay, we hit 30 on the relative strength index as opposed to 19, right? So that's a sign of bullish divergence that we could see bullish activity in the future on CCL. All right. um that's mostly the main stuff I'm watching. One thing that I do want to mention, that I think could boost CCL out and travel plays, right? Maybe like airlines and cruise lines, is oil prices dropping. Right, you got to think about that. If oil is going down lower, that means it's going to be cheaper for them to fly their flights, right? Or to go on these cruises. They're not going to have to spend as much money on oil, right? If we look at USO, USO is looking a little bearish, right? We had this nice head and shoulders pattern. We've been seeing it drop. We have a gap up to fill right here. Okay, at about $80, $80 to $81. So you do need to be cautious of that. But below here we have a gap down to 66, and we have some nice price levels. Okay, so what I did was I used the Fibonacci retracement tool, right, and went ahead and got some extensions on here. So we got the 127 is right now our very valid resistance level. It's at 74.7. Okay, you can see we're facing resistance there. If we come back down and break the 69.93 level, we're going to go ahead and get this gap fill down here to 66. So keep an eye on the price of energy and oil. If that continues to drop, that could be potentially something good for the cruise lines and airlines. Okay, no guarantees in the stock market. Nothing's guaranteed, but as I said, you do want to try to position yourself and prepare accordingly. All right, so thank you guys for watching. Don't forget to like, comment, subscribe, and also let me know what stock you want to see in the next video. Okay, I do viewer requests every single week, so if you want to see your stock in the next video, comment below.